Doug, today I want to talk about gold. You're well known and associated with gold and gold investments over the years, but what's your view on gold today? Should people own it?
Yes, they should. Look, uh, ever since I first understood the argument for gold, um, which was made clear to me in my old friend Harry Brown's book called You Can Profit from the Coming Devaluation. Harry wrote that book in 1969, 1970. I read it in 1971, and I didn't have any money then. I was just out of college. So. But then again, gold was only $35 an ounce in those days. So, I started buying some gold, and then I got into gold stocks. Incidentally, that book is even today a brilliant explanation of why gold is what it is and why you should own it and so forth. So I suggest people go on Amazon and pick up a used copy of it because it is a brilliant book. Harry was a brilliant guy, just generally. But anyway, ever since then, 1971, I've been buying gold coins sporadically, but as consistently as I could over the years, greater and lesser amounts, and I've never sold a single gold coin. Never. So I must have a lot of them now.
I imagine you do.
Various places. And I'm glad I did because, like the first 1 ounce gold coin that I would have bought back in the early 70s for probably paid $75 or $100 for it. It's worth over 2,000 today. That's not bad.
That's pretty good, actually. That's pretty good. But
Not bad. The advantage to doing that, to buying gold and sequestering it, or some would say hoarding it, or you could just say saving it, is that you're not going to piss it away. Because although gold coins are liquid, they're not liquid down at the local car dealership or the local grocery store. So you tend to hold on to it. It makes it easier to save. I mean, instead of coming up with something that you'd fritter away dollars if you were saving them. So anyway,
but it's
back.
today, but gold has gone up so much, up to it's under 2,000 now, but so much. What is it a mistake to buy it now? I mean, is
Yeah.
it already still high?
Yeah, well, that's the $64 question, of course. Let's look at it this way. In 1971, gold was a superb speculation. A good speculation, incidentally, is one which is very high potential and also very low risk. Most people think that speculations are, risky. Maybe you make a lot of money, but maybe you lose it all. No, that's not a good speculation. That's a gambling bet. Very different. A speculation is one where you're basically betting against the stupidity of government, which is almost always a winning bet. And in the case of gold, it had been artificially suppressed by the US government for years. So it was a one-way street back then. But let's look at the real price of gold, okay? So it was artificially cheap back then before Nixon closed the gold window to the Europeans, and the price of gold was totally freed up on, I think it was January 1st, 1975. So here's the story. Went from being artificially cheap to, by the time January of 1980 came, it hit $850 an ounce. And it was subject to a bubble. It was a mania in gold because it looked like the dollar and it looked like civilization was going to collapse in a lot of ways. It was a hairy time with interest rates where the government was paying 15, 18% for money. I mean, people can't even imagine that today. So yeah, gold went into bubble mode. And that was 1980. But the next time it hit a bottom was in 2001, when gold was about, I think it was 2001, gold was about $250 an ounce. And of course, the dollar was worth a lot less in 2001 than it was in 1980. So here's the interesting thing. In real terms, gold in in 2001, when it was 250, was actually cheaper than it was in 1971 at $35 an ounce. So I was all over it in 2001. And so where are we now? From 250 to 2, so it's gone up 8 times in 20 years. It's not the giveaway bargain that it was in 1971 or 2001, but in real terms, gold has gone up since 2001, 3 or 4 times. It's hard to say what the real inflation numbers are because I don't trust the US government's inflation numbers or any other numbers much more than I trust those of the Argentine government, quite frankly. They're all fudged, they're all manipulated.
Yep.
Not as badly and more subtly in the case of the US, obviously. But here's the thing. The world financial situation and economic situation, social, demographic, military, anything you want to look at, is much, much more serious, much, much more dangerous now in 2020 than it was in 2001, when gold was cheaper than it was in 1971, actually. So the answer to the question is yes, and it's going higher, even for $2,000 an ounce. Yeah, it's going a lot higher.
And what's the primary driver in the simplest way you can describe it that's going to cause it to go much higher from here?
Chaos. The problem with the dollar is it is the unsecured liability of a bankrupt government. And the US government is bankrupt. It is totally impossible for them to ever pay off their national debt. Forget about all their other obligations, insurance programs like the FDIC and so many of these things, contingent liabilities they have, not just the national debt. Forget about Social Security, which is something else entirely. Well, those things will be paid off. They will. They'll just be paid off with much, much cheaper dollars. That's what's going to happen.
And that's the official objective of the Fed, is to encourage inflation. And they were trying to historically, go hit a 2% inflation target, because that does inflate away the debt. And so, but they've actually unbridled their objective. So it's no longer necessarily they're trying to cause 2% inflation. They haven't put a cap on it. They're just trying to encourage inflation.
I don't know why they have these thousands of PhD economists floating around shuffling paper, because the whole thing is out of control at this point. I mean, the cat's really out of the bag. Look, the US government is running $2, $3, $4, $5 billion trillion, excuse me. There was a senator from Illinois many years ago who had this funny quip, Everett Dirksen. He said, yeah, $1 billion here, $1 billion there. Pretty soon it's real money. And of course, $1 billion.
Now it's trillions.
Yeah, $1 billion is just 1,000th of a trillion. It's a rounding error. It's actually a rounding error today. So anyway.
Well, so they're trying to inflate it away, and if they inflate it, then that makes the dollar worth more. So it makes worth less. So even that doesn't necessarily cause the gold price, the value of gold to change. It's just the number of dollars or currency units that you can exchange the gold for alters, right? So like, that's more of a bet on the currency losing value really than it is on gold increasing in value, right?
Well, yes, partially, but there's going to be a panic out of the dollar at some point when people start realizing, wait a minute, when they realize what's going on, when they gain an understanding of what's known as modern monetary theory, which is not modern, and it's one of the more stupid ideas that's gained currency in all of world history, which basically says, print up as much money as you want. It stimulates the economy. This is all crazy for all kinds of reasons. But as people see that the cat is really out of the bag, they're going to start wanting to get rid of dollars, and especially bonds. The bond market is much bigger and actually more important than the stock market. And people that are sitting on bonds right now they're actually sitting on a time bomb.
Hmm.
Those bonds today are what can be called certificates of guaranteed confiscation. It's just incredibly stupid, with interest rates closing in on zero, to own bonds. If it's a solvent bond, with interest rates as low as they are, it's as high as it's going to go. And when interest rates eventually, look, bonds are a triple threat to your capital. This is why gold is going up. Because people that own bonds in particular are going to see, wait a minute, why do I have these bonds in my pension fund or wherever they are? They're a triple threat to my capital. Number one, the dollar is going to be inflated very rapidly, and bonds lose value proportionally with inflation. Number two, interest rates can only go higher at this point. The government's going to do its best to keep them down where they are, because if they even go up to 1 or 2 or 3%, it would collapse the whole shaky, over-indebted financial structure. Forget about going to the levels of the early 1980s, or even back to normalized levels. So, okay, number one, the dollars that the bonds are denominated in are going to be inflated out of existence. You got the interest rate risk. The value of bonds fluctuates inversely with interest rates, and they're only going to go higher soon. I don't know when. And the third thing is the default risk. The U.S. government's not going to default. It'll just print up more money to pay them off. But a lot of corporations that have gotten over indebted, the economy slows down, they're not going to be able to hack it. So you got those three triple threats to your capital, and no upside at all from bonds at this point. So where's that money going to go? Where's that capital? Many, many trillions of dollars in bonds. Where's it going to go? A lot of it is going to flow into gold. Why? Because gold is the only financial asset that is not simultaneously somebody else's liability. And I think after the current system collapses, and I hate to say it, but it is going to collapse into a smoking, cratered mess. There's no way out at this point. I hate to sound so radical. It's a hair on fire kind of statement. I hate to say things like that, but I just don't see any way out of it. I really don't. So where is that? What's going to happen is that the new monetary system, I suspect, is going to be based on gold. But we don't have to wait for that, because right now, take the Russians and the Chinese. When they trade with each other, it's unbelievable. Most people never think of this. When the Russians trade their oil for whatever from the Chinese, they have to use a currency, basically. And what do they use? The Chinese don't want rubles. They don't trust them. The Russians don't want yuan for the same reason. They trade in dollars, which clear through New York. And it's insane, and they know it, using the currency of their adversary clearing through New York when they trade with each other. So there's going to be a new currency minted by probably the Chinese, a gold-backed yuan, and it'll start replacing the dollar, just as now the SWIFT system, which is how almost all currency, 75% of the world's commerce is done in dollars, and it's all transferred to the SWIFT system. The Russians are coming up with something which I prefer to use instead of the SWIFT system once it becomes more accepted. So the dollar's on its way out, and the Russians and the Chinese have been buying huge amounts of gold over the years. In fact, central banks now, for the first time in many, many years, are actually net buyers of gold. Why? Because they have reserves. And what are most of their reserves now? US dollars. I mean, central bankers aren't the brightest crayons in the box, but some of them aren't stupid, and they don't want to be holding this hot potato called the US dollar. So what are you going to use as a reserve instead? The Argentine pesos? I don't think so. They're buying gold. Right. So there's a good book. Let me recommend this, Matt. nobody's been writing anything about gold for a long time because having gone through Keynesian economic courses in college, most graduates think that gold is a pet rock. It has no value. They don't understand it at all. So there hasn't been anything like Harry Brown's book, or for that matter, my book that came out in 1979 called Crisis Investing. There have been a few others, but recently nothing, except my friend E.B. Tucker has written a book called Why Gold, Why Now? It's available on Amazon. And I suggest listeners buy a copy of that. It's a very, very sound and good introduction to gold, the metal. And it's current, just published.
Yeah, I agree. EB does a really good job explaining it, especially people who don't have any background in it. It's really, really effective. So he did a great job. I agree. So basically, when you view gold today, there's two sides to it. One is that if the currency is being inflated or devalued in other ways, then gold acts as savings because it preserves the capital. Like even if the dollar may go down, but gold will adjust accordingly. Essentially, it'll sell for more dollars in the future. So it's just as a way to preserve savings. But the speculation part of it, where there's the upside, is that once people kind of figure out what's happening, then there's a rush into it, and then that causes the price to appreciate beyond the inherent value maybe of an ounce of gold. Is that right? So you have the savings, and then you have that speculative that's driven by the emotional, the mania of the crowd coming in.
Yes, and that's certainly going to happen. But if you want to treat gold as a speculative vehicle, I think a better way to do it now is gold mining stocks. Because relative to gold, relative to almost anything, look, I've been playing with gold mining stocks since the early 70s. And I've seen some fantastic bull markets. I mean, there have been several since the early 70s when the average gold exploration and development stock average went up 10 for 1, and some went up 100 for 1. And I've personally owned at least one that went up 1,000 to 1. And not over the course of a lifetime. I'm talking over the course of a couple of years. That's how volatile they are, because the gold mining stock universe is teeny weeny. Do you know that right now, you could buy every producing gold mine in the world for just a little bit more than the cash that Apple has in its bank account? I'm not talking the market cap of Apple. I'm talking the cash in Apple's bank account. I mean, they're really, really cheap. And furthermore, the cost of mining gold, when I first got involved in this, the South African gold stocks were the way to do it. They were always high dividend yielders, but they were able to make money at $35 an ounce, which is pretty amazing, and pay fat dividends back in those days too. But the first real score that I made, well, this isn't exactly true, but in percentage terms, it's about true. When I was I'll tell you how, I don't know where I should start with this thing. There was a guy, this is kind of an interesting anecdote, so I'll tell you about this. I was a stockbroker. I was in Washington, D.C., and I took out ads in the Wall Street Journal to solicit clients to buy gold stocks. That's what stockbrokers did in those days, in the days before Robinhood, when there were still commissions paid.
Yeah.
So anyway, a guy named Elmer gives me a call from the Maryland suburbs and says he wants to come in and invest a little bit of money. And I thought, this is probably a good old boy who's kind of wealthy. So it turns out that Elmer took a bus in to see me, and all he had was $2,500. So I said, okay, So I bought him. What did I buy, Elmer? I bought him like 1,000 shares of Grootfly, no longer exists, at like 40 cents, and a few hundred shares of Anglo American of South Africa, a few hundred shares of Stillfontein. None of these things exist anymore. Anyway, the next day there were riots in Soweto, and simultaneously, gold hit the bottom in 1976, which I remember particularly, $103.50 an ounce, down from 200, which it hit in 1974. So it looked like gold was crashing, and it looks like South Africa was about to fall with the riots in Soweto. So Elmer calls me up, and he says, you know, I'd like to take those stocks back. He was scared. And I said, Elmer, you can't take them back. This isn't Kresge's. So he hung up the phone on me. And then if you're a broker and somebody decays, there's two things you can do. You can either sell it back into the market and the broker absorbs the cost, or I just journal them into my own account. Why? Because I figured if anybody as unsophisticated as Elmer was selling, it must be the bottom. And by God, it was. At that time, it's unbelievable, but it's true. Grootfly and Stillfontein and Leslie, that was the other stock. All of them have been absorbed, they're all gone. They were yielding 50, 60% in current dividends. Current dividends. This is almost cosmically impossible, people think today. And from there, as gold went to $800 an ounce, those dividends doubled and doubled and doubled again. Okay, so these are very volatile stocks. Tiny market cap. When the public gets the bit in its teeth, it's like trying to get the contents of Hoover Dam through a garden hose. They are explosive. They're dynamite. Much more than tech stocks. Much more, because it's a teeny weeny market. And there's no rush like a gold rush. Okay, so what I'm saying right now, even big companies, the all-in sustaining costs, when I quoted $35, that was a cash cost. You know, forget about administration, forget about capital costs. Just the current cash cost to mine gold back then was $35 an ounce, or less, obviously. Today, they calculate these things differently, and all-in sustaining costs are everything to produce an ounce of gold, including replacing the asset. Because it's a diminishing thing. You mine an ounce of gold, you're eating your basic capital away. Okay, so let's say the average all-in sustaining cost of the industry is about $1,000 an ounce, but gold is $2,000 an ounce. It's a very high margin business. That's why Buffett bought, what did he buy? Like 10% of Barrick, which is the second largest international miner. And Buffett is, he may be an idiot savant in a lot of ways, but he's a genius when it comes to investing. He may not ever buy gold, but he can see that the mining business is the place to be for the next few years. It's going to be very profitable. Fund managers have been educated away from gold stocks for many, many reasons. I can tell you all the reasons that gold stocks have historically been a crappy investment. I can give you lots of reasons why you shouldn't invest in gold stocks. But now is one of the times you should invest in gold stocks. And they are going to be explosive on the upside.
And I just want to take a moment, plug a book you wrote about these mining stocks. You have a series of novels, and the first one is called Speculator. And this book basically follows somebody as they're really investing in these gold stocks and learning about the ins and outs of the mining business and making a fortune along the way.
That's true. This is the book. It's available on Amazon and also in hardback from the publisher, High Ground Books. Maybe you could link to that. Wow. But it actually won the Leonard Read Book Award. So it's actually a pretty good book. But it's about our hero, Charles Knight, who at age 23 kind of gets interested. They say that everybody's first novel is semi-autobiographical. That's the case. Yeah. So our hero gets interested in gold stocks and, buys a few and gets lucky with one. that claims it has the biggest gold discovery in the world, and the thing explodes. Doesn't put much money in it, but he makes hundreds of thousands of dollars, and he figures that he ought to go to Africa to check it out, get an education, and see what he's got. And this book, Speculator, is about the gold mining industry, and it's about gold, and it's also about an African bush war and all kinds of really interesting stuff. So it's a good entrance, I'd say, along with EB to gold mining and gold.
I think so, and it's very entertaining, and there's a series. The second one is actually, in my opinion, even better, which is called Drug Lord. And the third one, Assassin, is coming out any day.
Oh, you'll love Assassin. It's the most radical of these books. These books are getting more radical, each one after the other. Assassin is highly politically incorrect. It talks about the morality and the virtues of political assassination or killing people in general. Is it right or wrong? When is it right or wrong? And also talks about some technological things. And it's going to be out in 10 days. And
can't wait.
Please.
I can't wait. So let me, one of the arguments against gold that I've heard now is that in an inflationary environment, it makes a lot of sense. It makes a lot of sense because if nothing else, you have that saving component, right? Where the dollar is losing value. But, I think that the Fed seems to be like terrified of deflation. Like all the things that they do seem to be because they feel like it seems like the worst thing possible. And so at all costs are trying to avoid that. But, just because of the leverage in the financial system, it's possible you could have, at least temporarily or for some sustained period of inflationary pressures. And like, how does gold do in that environment where, if that does come to be?
Well, to start with, I've got to say that this is proof of how they're not stupid, because they generally have very high IQs. They just can't determine the indirect and delayed effects of their actions. Deflation is actually a very good thing from the point of view of the average person, because it encourages them to save. And that's how you become wealthy, is by saving. When it's a deflationary environment, the dollar becomes worth more. And so the average person actually gets wealthier, just like inflation destroys your savings. So everything is backward. We live in a bizarro world today. But how's gold going to do? And I agree with you. They won't allow a deflation. They'll just print up money and they'll bail out whoever needs bailing out. I mean, if there's a $10 billion bond issue that's going to default, what are they going to do? Well, the Fed will bail it out because they can't afford, because that's $10 billion that is wiped out. It dies and goes to money heaven. That's how deflations happen. Then the stock crashes, and then there's a panic, and everybody else sells, and the price level drops, and then nobody can pay their debts. That's why debt is such a deadly thing in a deflation. Okay, so the Fed's not going to let that happen. They're going to destroy the currency to prevent that.
Right.
But why is that going to be good for gold? Doesn't matter whether we have deflation or, because gold is the only financial asset that is not simultaneously somebody else's liability. And in today's world, where lots of people and companies and governments owe lots of other people and companies and governments, counterparty risk is a giant risk. And if you own gold, you eliminate counterparty risk. It's in your own hand. You don't have to trust anybody. And all these financial assets, and the world is entirely too over-financialized. It obviates that. And that's a huge risk, counterparty risk today, where anybody could default and it becomes a daisy chain where I can't pay. And so the next guy that I owed can't pay. And the next guy he owes can't pay. And that's
Right.
exactly the situation that we're in today.
We got a preview of that in 2000 in the financial crisis because basically, institutions that appeared solvent one day because of their, liabilities they might have had associated with another institution, or assets that they had at another institution, or leverage that they had baked into the cake somewhere with some other institution. When they fail or they have trouble, then all of a sudden, a seemingly strong financial firm can go from solvent to insolvent virtually overnight. And that's like cascading consequences of all these, of the over financialization. I was thinking about this idea of, if in deflation, because if our currencies basically is backed by debt, right? I mean, that's really what our currency is debt. And if there is a deflationary environment, then debt is the worst thing you can imagine. I mean, debt will lead to defaults everywhere in a deflationary environment, which is why the Fed tries to stop it. And so if you think it logically, it seems to me that if the currency is based upon debt and a deflationary environment causes debts to default, then it's hard to imagine that the currency doesn't end up defaulting essentially in that environment and become fundamentally worthless in a deflationary environment, which of course is then good for gold also.
Yeah, exactly. The dollar at some point is going to become a hot potato. And there have been times since gold was cut free from the dollar was cut free from gold in 1971, when Americans found that Europeans wouldn't take dollars because they were fluctuating too radically. So a French merchant didn't want the dollars. You'd have to find somebody else who would change it into francs before it would be accepted. That's going to happen again. And we don't know, I don't think anybody knows how many US dollars are outside the US in the hands of foreign central banks, in the hands of Russian gangsters. I mean, not too many years ago, it was said that there were more $100 bills in Moscow than there were in all of the United States. It was said, but throughout the world, the dollar is in cash form, as well as in electronic form, is used as the numeraire. It's used as the national currency. And how many are outside of the US? 20 trillion, 40 trillion. Nobody's got a real grip on it. But at some point, when people see that what's happening to the Argentine peso is happening to the US dollar, these people they don't have to use dollars to trade with each other in Brazil. They can use the national currency or something else. So they'll unload those dollars and they'll all come back to the US to buy title to US farmland, to US stocks, to US technologies, you name it. And that's going to impoverish the American people because Americans won't own that stuff anymore. People with foreign passports are going to own it. And all those dollars coming back into the US are going to compound the problem that is making those people want to get rid of their dollars. There are going to be more of them coming to the US. Prices are going to explode. I mean, we're looking at a real potential economic catastrophe. And it's going to have political consequences. It's going to have social consequences. It's going to be something to behold. It really is.
The thing is that
but it's not going to last forever. I mean,
yeah,
most of the real wealth in the world will still exist. You know, farms and factories and technologies, they'll still exist. They'll just change ownership. And the people that preserve assets they'll do it through owning gold. They'll own it, owning farmland, owning productive assets. So, but I'd prefer to own gold because it'll be very liquid again and there'll be a panic into it. So,
I think your metaphor of the water flow held back by the Hoover Dam through a hose, it's that makes it a remarkable speculation opportunity because the gold market is so small, right? I think that's why that's better than maybe some of these other productive assets that you might buy.
It is a potentially life-changing speculation right now, but basically you want to buy gold first and foremost for savings, for prudence, for safety. That's the main reason you want to buy it. And look at the gold stocks because they're so cheap right now and they're going to be explosive on the upside. And the fact that Buffett, after all the nasty things he said about gold in the past, is now known to have bought Barrick. This is waking up some of the dim bulbs that manage all this money in Wall Street. And interestingly, at the Denver Gold Show, which was last week, I guess, it turned out there were 200 fund managers that showed up to learn about gold stocks that had never been there before. So there's going to be a lot of buying coming into this space. And in the whole world, there are only 2,000 gold stocks. Most of them are teeny weeny. They're not micro caps, small cap. They're not small caps. They're not micro caps. They're not even nano caps. Some of them are pico caps, these things. and 90 to 95% of these 2,000 companies that claim to be exploring for gold, most of them are explorers. They're just crap. So there's a small universe, maybe 100 stocks that are producers or developers or explorers that have such good management that you almost want to own them. And there's going to be a lot of buying coming into them, and it's starting to happen now.
Can I ask you just one more question about timing of things? Because in 2016, there was a big it was a big run up in gold stocks and in gold, and it appeared, especially with gold stocks, but it appeared as though they were really breaking out. It's almost in many ways like a mirror of this year so far, where between January and August, like GDX, which is the big gold miner index, was up like 160% in both of those years. But in 2016, it dropped, toward the last quarter of the year, about up to, I think, maybe even 40% from there, and just kind of like hung out there now for 2.5 more years until January of this year. And I just wonder, like, how does that happen in 2016, and why would you think that wouldn't sort of be the case now? And that that while stocks have pulled back a little bit now, there's been some drawdowns in the last several weeks. Is now a good time to buy, or are there really going to be is it really going to be more like 2016 again, where it's going to be some time?
Yeah, well, I don't have a crystal ball, and anything can happen. And frankly, what happened in 2016 surprised me too. They're very, very volatile stocks, these gold stocks. So I didn't sell any. I wish I had sold at the top, then I could have bought back twice as many if I could have figured exactly what the bottom was.
Exactly.
Nobody can do this. There are people that run trading services that claim that they can do this. Well, and I suppose there are a few geniuses out there that, can do it, but not likely. So I just buy quality issues that have, I've developed 9 Ps. The 9 Ps, when you buy a gold stock, what are the 9 things you should look at before you call your broker and place an order? It's a mnemonic. 9 things that all begin with the P. Now, it's a mnemonic, which means it helps you to remember them. But can I remember 9 things right now?
We'll see.
I'm not so sure. But the first one is people. It's the people that are involved with the company. So you've got to, if you hope to do well in this area, it's good to get to know the people running these companies and check out their reputations and see if they've been successful in the past or if they're just promoters that are essentially scam artists. So people is 50% of it. If you buy a company with spectacular people, and I guess I know most of the people in the business because I've been doing it for so long.
And it's small. There's not that many of these guys who are successful over and over again.
No. There's a couple dozen names, kind of, and even less than that. So if you just buy companies that they're associated with, that's actually all you have to know. Number one, okay, but you can do better. You can fine tune this. Property is number two. Now here is where it helps to know something about geology, a little bit about mining engineering, something about metallurgy, so that you can assess on your own, although the guys that are running the company will have done this, but it's good to know for yourself because so assess the property, that's number two. Number three, financing. Financing spelled with a PH. Mining is a capital intensive business. It's not just a question anymore of a couple of prospectors wandering around with the mule and finding the treasure of Sierra Madre. Now you build a mine, it takes millions to explore in today's high-tech world with scientific methods of various types to find out where the gold might be. And then you have to drill, which is expensive. And that's just to find it. And then your problems have just started. Then you have to develop it and you move millions of tons of rock or dig 1,000 feet under the earth. Financing is important. So that's a third thing to remember. Fourth thing, politics. What are the local politics? You could have the new Golconda. And if you're located in the wrong county or the wrong state or wrong province or wrong country, it's never going to be developed because, you know, they'll stop you with NGOs or taxes, or they'll want bribes, or they just won't want it to happen because they've heard that mining. So the politics, it's important to understand the politics as well. Another thing is push. What's the catalyst that's going to set the stock off, get it moving? Okay, is there some event that's going to draw the public's attention to it, which is related to promotion? Some stocks are over promoted. I mean, everybody knows about them, and the stock gets way ahead of the value of the company. On the other hand, some stocks are under promoted. Their light is hid under a bushel, and that can change on the favorable side. So you got to look at how promotable these things are. I'm missing several. I don't know if you can remember any of them or not. I'm looking at a piece of paper to tell me, which I would if I was analyzing the stock to make sure I covered all the bases.
But the biggest one is people, though, because presumably if you've got the right leadership, then, you know, they understand the geology. They definitely understand the politics. They have the ability to make sure that they have, you know, enough capital on the balance sheet, essentially be able to finance operations. And usually the best people in this are definitely good marketers. Like, they're good at telling the story of, of the company, you know, getting, you know, investors and employees and the market in general to basically recognize that they exist and believe that they can bring this thing into reality, because it is a hard business.
Oh, very hard. That's another one of the P's, is pitfalls. When I'm talking to guys in the business, I always like to ask them, after they tell the story of why the stock is a good place to put money, I always ask them, well, what can go wrong? And I listen to what they see as possible things that could blow everything up. And then after they give me that, I ask them, okay, that's good, but what else can go wrong? And sometimes you get the real answer then. So you got to look for pitfalls entirely apart from these things. And there's still a couple more missing, but anyway. Even
just the promoter of the company really knowing, I mean, just being able to gauge whether or not they're even aware of what the pitfalls might be, like that they're, you know, savvy enough that they would be aware of them. And if they aren't willing to admit that there are some, because in any business there are, and in mining, you know, especially these exploration companies definitely are, if they aren't willing to acknowledge them, then, you know, that tells you you're dealing with someone who's maybe too much of a promoter. Yeah. And, you know, I've said for years that mining as a business is a crappy business. It's a 19th century choo-choo train business where you have huge upfront capital costs that can go on for years.
And, you know, it's terrible. There are just certain times when it can be a great business. And this is one of those times, a rare time, where a crappy business is a great business to put money in.
You know, one last thing I just think is worth ending on is that, you know, because you don't know, I think where I've seen, and I personally have made errors investing in this space or speculating in this space, better way to put it, is that, you know, is that you really don't know what's going to happen. You know, I mean, there is real uncertainty about timing of things. All the narrative can be right. Like the case, the macro case is happening. It's been happening, you know, since 2001 with this leg with the bull market. And this is, as our friend Frank Ajustra says, this is the third leg he thinks in this massive bull market. You know, it's been going on since 2001. But you know, there are drawdowns. There are time periods where it goes down. So it's basic capital allocation. You know, making sure that you know, whatever you invest in anything, you can afford for it to go down without feeling like Elmer panicked. That's now that it's time to sell because it moved in the wrong direction.
Yeah, that's right. There's all kinds of risks in this business, but as always, the biggest risk is probably your own psychology.
Our own psychology. I totally agree. All right. Well, good. Thanks, Doug. Definitely encourage people to check out the books we recommended. I'll link to them in the description here of this video. And thanks for joining us.
Thanks, Matt.